So I think the biggest selling points versus Bloomberg, to start, are price. Bloomberg's $25,000 a year. I guess I'll show you my whole business plan. Why not? The key is modularity. Problem with Bloomberg is it's one size fits all. And there's a lot of different types of investors. Maybe segmentation is another good word. Okay, so when you've got Bloomberg, let's see, is this the color Bloomberg uses kind of, right? So this is Bloomberg, $25K a year, no matter what. One size fits all. We're right now around $1K a year, right? But, we are going to go up in price. But here's the thing. On Bloomberg, you get bonds, equities. Across all of these are things like news and things like that. But, the way I look at it, I guess, is you sort of have this three-dimensional matrix, three-dimensional tensor, I guess, or whatever. And here on the x-axis, you have, let's say, asset classes. So I just listed some of those. Bonds, equities, commodities, indices, or index futures, index prices, spot commodity futures, commodity spot, mortgages. That's the x-axis of this three-dimensional. The y-axis is countries. Some of those are country-based, some of them are not. It can start at 4K, but Icon is fully loaded, is close to Bloomberg. 80 is too cheap. So x-axis is the asset class, y-axis is the country, and z-axis is the function. The function could be news, graph, any other thing. There's hundreds of functions, holders list, focus, etc. So basically the job is to fill out this cube as thoroughly as you can. As you guys know, we don't have every part of this cube filled out. But there's basically three things you can do to compete. Have the most asset coverage, have the most country coverage, and have the most functions. The first two are pretty easy. This is just a matter of sort of time, getting every data source locked in. And it does take time. All our competitors don't have that. TradingView, CoinFin, these guys don't have certain exotic assets, and neither do we right now. But we will have those. Some of them don't even know what exotic assets look like because they're not really traders. But we'll fill out the asset list and the country list. And then that's sort of this matrix. And so my point is, this is pretty much filled out by Bloomberg. They're missing some stuff, but it's mostly filled out. Godel's fill on this is a little bit more. Is there a spray paint brush here? I think so. It's a little bit more splotchy. There's some areas where are really solid, and then there's some where, we're completely missing. But, that's the idea behind the XY axis. The Z axis is where things get interesting and complicated. Like options is an asset class. But what can you do with options? Do you just want to graph an options price? Well, that's just one dimension. That's here. That's easy. But I want to graph historical implied vol. Well, that's another dimension. I want to graph three-dimensional skew. That's another dimension. I want to do an option strategy builder and simulator. That's another dimension. So you have to fill out all those dimensions. And what's nice about that is Bloomberg doesn't have everything. There's a bunch of stuff Bloomberg doesn't have. So you can create a better cube, and then they are going to have to fill out the cube a little bit better. So our differentiator starts with price and our pricing strategy, which is if you use just equities, at least this is what I hope to do. If you're just going to use equities, you should be able to have everything Bloomberg has on equities. But if you're not going to use bonds, fixed income, or commodities or indices or mortgages or CDS or converts or FX or crypto, and you just don't need any of that. And you're only going to do US. The data we're paying for all of this stuff, but we only really pay on some of the stuff if we use it. So like our cost to service you as just a US trader is pretty low. Especially if you're not going to look at these other asset classes in other countries. So Bloomberg pays for everything, and you have to pay for everything. But for us, I think it would be reasonable to pay $1 to $3K a year to have like sort of a Bloomberg equivalent or better, hopefully. Like I said, there's other functions we're going to do that they don't have. But we can't create new countries that they don't have. We all know the same countries. We can't really look at new asset classes they don't have. There's only so many asset classes. We could do a couple different things in different areas, but in general, the way you differentiate is here in this function category. So we could do better quant tools. We could do better workflow tools. We could do better transaction tools. There can do, all kinds of things like that. But if you're just going to be a US trader and you want the Bloomberg experience or Bloomberg plus new features, or maybe we're not going to be as good at Bloomberg at some features, whatever it is, 1 to 3K is very reasonable, but Bloomberg makes you pay the entire 25K, whether or not you use bonds. You may say, I'm never going to look at a bond. And you may say, I'm definitely never going to look at a Japanese bond. But Bloomberg is paying for Japanese bonds. And if you use them, you're paying, whether you use them or not, you're going to pay too. So I like this idea. Now, let's say you want to use equities and fixed income, and you do that in the US and Europe. Okay, well, that's sort of like half of Bloomberg to me. So maybe that's 10K a year. And, this is for a professional. This is not for, a person that's not, Bloomberg is also for professionals. So 10K a year is around $800 a month. So that has to make sense for your firm, hedge fund, sell side firm, whatever, or it's to make sense for your portfolio. And, you'd have to be trading, around $1 million or more for that to make sense. I think the consumption-based price is up to a point. I mean, there'd be some cap. So, if you log in, so take for example, okay, you do this, you care about this, but you log in once a week and check it for 10 minutes, your bill should be pretty low, because you're not really using it. But we still do have to pay for the access to the news and stuff like that. So it's sort of tough, but I think we should be able to do something at the right price. No, Zena, look, it's not a tough question at all, but Icon goes all the way up to 20K a year, the LSEG workspace. If you get a really stripped down version, yeah, maybe you can pay $200. LSEG workspace is, I think it could be more expensive than Bloomberg if you run it the right way. Here's their product, and they're a partner of ours. We buy data from them, but their system is also not terminal based. But if you try it, see if you like it. If you like it, see what you like about it. Tell me about it. We'll build it too. But yeah, they're trying to sort of do what we're talking about, which is, have your cake and eat it too. By the way, if you have one of these logins, I'd love to pay you some money and we could share the login. This is the kind of, these guys aren't really, in my opinion, traders. Like here, you got ESG scoring profile on your cell phone. Who wants this? Mobile, traders are not on trading for mobile. You might look at prices on mobile, but this is not, your personal. This is a little, this is a shipping manifest software. If you look at this is like the main screen. You can see that it's kind of this like simple SaaS front end. It's not really a terminal. So if you know Bloomberg and you expect Bloomberg, you ain't getting it here. Yeah, I wouldn't use this. The menus here, you got to use menus, and menus are just not practical in finance. Augmented recommendation. But yeah, the full Monty for this thing is more than Bloomberg actually. So they might give you some crazy stripped down version for roughly our price, but just the data alone, costs hundreds of dollars a month, and it's meant for institutions, and they're going to try to upsell you like crazy. Yeah, we may do something like Robinhood, maybe. I'm thinking about it because, the problem with Robinhood is basically their clients dump in $2,000 a month, lose it, and then just dump it in again, lose it, dump it in again. It's basically a casino. How big of a brokerage could you build if you got that, except they kept their money and you just lose it? So, that's kind of the way free users will have streaming. Yeah. This is why Robinhood is why stuff like D-Wave and IonQ is up. I don't know if they're the future or not, BDACL. This happened in 2000 with E-Trade. They had that E-Trade baby. It's a good business. I'm not doubting the business. It's great business. But I don't think the investors are Warren Buffett. Well, Jensen, look, you want to talk about the real Nvidia quantum. We got you want to talk about real Nvidia business. There's a lot of intrigue and mystery there. There's some things I'm actually sworn not to say. There's other things I can talk about. But look, the relationship between what a lot of people are concerned about is the common ownership of customers. You should never, ever, ever invest in a customer if you can help it. Can you? Yes. It's perfectly legal? Yes. But the problem is, if you're giving your customer the money to buy your goods or services, it's just a very weird look. And I would never, ever do that unless I absolutely had to. You know, CoreWeave and Nebius and some of these other guys, they have money from Nvidia. And, you know, I don't know that that's necessarily healthy. They're not the biggest stockholder of these companies, but they own enough that you know they influence things. You don't want to see that as a shareholder. Now, it hasn't really mattered that much. You know, people love the product. It's not like it's going anywhere. It's not like there's a big problem. You know, related. It sort of becomes a related party thing, which is not great. You know, now they're not technically related parties. That's a legal definition of a certain ownership threshold and all this stuff, but you just, you know, there's no reason to give your customer the money they need to buy your product. It's, you know, they did this in the early .com days, and it was very suspect. And some people even went to jail for it. I mean, you start round tripping and doing tit for tats and all these things, like it just, the customer should buy your product because they need it and it helps their business. That's it. Once you start intermingling, it's nobody wants that. It's vertical integration to some extent, but their customers may not make it. So a lot of them aren't going to make it. So it's very curious. But I you know, I don't disagree with that. You know, it is vertical integration, and it's not illegal, and it's not. There's no real problem with it. I just wouldn't do it because it makes the market wonder, does your customer need your money to buy your product? Would you have sold as much product if you didn't invest? I certainly wouldn't do it. The upside is not worth it. You know, it's kind of a no-no in the corporate world. You know, it's but you know, they've been doing it, you know, kind of, I wouldn't say sparingly, but they've been doing it here and there. It's probably not enough to really meaningfully change their business. I think, you know, GameStop will probably fade, but I don't know if this is like one of these, it's sort of a coin flip. Somebody wants me to look at Abercrombie, ANF. Let's look at ANF. I've looked at an apparel company in forever. Hosky, I've taken the hedge fund list is now going to be in Godel only, and it's going to be only for paid users. It's even going to be only for paid users who have been paid for several months. That is top secret list. I should not make that public. I got to call around to find those results. If I ever see anybody share it online, shutting the studio down. I'm raising prices, taking the list down. All right, let's look at Abercrombie. Yeah, you can direct message me on Godel. I've made it a point to be a lot more responsive. More busy than I'd like to be, but if you're a customer, I want you to talk to me. I work for you. I don't work for anybody else. It's Abercrombie, not Abercrombie, right? Can't say I ever order their stuff. Abercrombie and Fitch, 50 million shares outstanding. $75. $4 billion market cap. 50 million shares outstanding. Current assets, 683 million in cash, 55 million marketable. Securities, what else? 570 property, plant, and equipment. 3 billion enterprise value. 4 billion, but almost $1 billion in cash. That's the way one should look at it. All right, let's dive into the numbers. They're growing? Not bad. Fashion kind of waxes and wanes, doesn't it? Oh, I love Amex. Amex looks great. Amex is one of the cheapest. Probably of all the mega large cap stocks I've looked at, the best long looked like Amex to me. Now again, you know, take it with a grain of salt. Walmart looked very expensive. Costco looked very expensive. Home Depot looked expensive. Procter looked expensive. LVMH looked okay. Accenture looked expensive. Lindy, we just looked at, looked very expensive. So Pinduoduo and Amex look pretty good. Yes, this spreadsheet is on my GitHub. It's in the screens folder of the models repo. Oh, okay. Yeah, I mean, some of the other large caps look good. I'm talking about this recent binge. looking at companies I don't know. Good margins for Abercrombie. Problem being a U.S. company is the U.S. taxes. You can't even try to do offshore stuff. You got to pay the full U.S. corporate tax. Done something wrong here. There we go. Okay, perfect. 9 months cash flow, 402 and 350. CapEx, 132. Free cash flow, 270s. That looks pretty cheap. I guess the brand is getting hit, but sales are still up. No, there's federal tax. 14% revenue growth, pretty good. Looks crazy cheap to me. Yeah, why is this not a double? Abercrombie looks pretty good. S&P down 90 basis points, kind of falling apart there. Yeah, fashion comes in and out. That's the big problem. Yeah, I mean, of course, all this stuff could be made in China, but this is American high fashion. Abercrombie pioneered the preppy look. We can look at some of the clothes too. I don't know if we'll be able to divine very much, but yeah, J. Crew has been erased. Memory hold. All right, so they started Abercrombie in 96. Oh yeah, it was hot when I was in high school. It just came out. Oh, and they have Hollister too. I forgot about that. Let's not make fun of, what people wear. Not everyone can maybe afford what, you wear, perhaps. I think they'd be a little bit affected by the recession, yeah. Well, even if there was a scandal with the CEO, as long as the revenue is going up, who cares? Let there be scandals. Let's look at Abercrombie a little bit more closely. Okay, so it looks like the last year of cash flow is not necessarily representative of what is typically happening. They kind of hit the fashion right really well, but that's not always what's going to happen here. So I think as a long, you might be making a mistake of looking at one really good year of cash flow and assuming that's going to always be the case, but it's very lumpy in the fashion business, right? Look how lumpy the cash flow is. Sometimes it's great, sometimes it's terrible. So the cash flow lasts 4 years. 300 million, 200 million, negative 160 million, positive 500. Say the last 4 years and average it out, it's 200. That's 15 times prior average 4-year cash flow. Keep going back and seeing what's the history of these guys. I don't know apparel that well, but unless your revenue and earnings are consistent, you can have these kinds of wild swings in cash flow. It's not normal. Yeah, I see here 2019 was a good fashion year for them. They did 3.6 in revenue. I do answer all DMs. If you DM me on Godel, it is my obligation to answer you. If I don't answer you, shame on me. You got to call me out. I don't care what you want to talk about either. You're going to use my service. I may not be able to have the longest conversation with you and babble all day and all night, but what's the point of a community if we don't all talk to each other? I mean, I've gotten some of my best stock ideas from you guys. All right, so this year they only made 100 million cash flow. It's GodelTerminal.com. Yeah, futures coming real soon, guy. Don't worry. Not gonna leave futures out. And commodity futures, agricultural, metal, livestock. We're working on everything. We'll have something really soon. Something big really soon. So just be patient. Yeah, so I think Abercrombie, at first it looked very cheap, but now that you look back a couple of years, you see that's probably pretty fairly valued. Unless you think they're going to get into some amazing, consistent performance, which it's been anything but consistent. Okay, so go back 5 or 6 years, you can see their cash flow is very, very spotty. Kind of comes and goes. So they spend a lot on CapEx. So it's 6 years now, been around 200 average cash flow. Some years higher, some years lower. If you think that's going to permanently change, great. That's a big deal. But the reality is it's been around the same level for forever, 10 years. So whatever they're doing, it's not really clear that it's gonna like massively change anytime soon. So now again, if something's profoundly changing with their business, that's real and sticky, great. But if anything, it sounds like something bad happened, and that's gonna be a problem for their business. Basically, in my opinion, that is correct, and that's more or less right, Husky. Yeah, the problem with the non-Bloomberg rivals is that they're not backward compatible with Bloomberg, and once you learn the Bloomberg, you don't go back. It's just like that other saying: once you go blank, you never go back. What is it? Once you go something, you never go back. Once you go Bloomberg, you never go back because it's so convenient. So anybody competing with them, they forget that you really need the terminal system, the commands. And so we made ours backward compatible, which all our rivals will do pretty soon. But we have other surprises in store. Yeah, desktop's coming. Look, we had a company dinner last night. Our company more or less still fits around the table. So soon won't be able to fill around, it barely fits around a full table. And there are a bunch of people that couldn't make it. We have a guy in Germany. We have somebody that couldn't make it for another reason. So locking in is a really scary thing because we got a bunch of people at $20 a month. I think we spend more than $20 a month per user on data. So we're losing money on those guys. I don't know if we spend 40 or not yet, but at some point we will spend more than 40, and then we'll lose money on those guys. So if you're a user, you got the lock-in email. You should have gotten it. Check your spam. Who's your data guy? Well, the whole company's a data team. This is our job is data. All right, so Abercrombie fairly valued.